So we are moving into what I call the next generation of growth. We saw the first generation, which was, a mixture between analog and people trying to get into the internet. And now I think it's going to become truly global. We just saw the latest studies that about 25% are really moving towards 100% digitalization. So it would be more consumer facing, it would be mobile native, and it would be cloud native. And IoT and digital health will or medicine will merge together into one integrated digital health and life platform. So this is going to happen over the next 2 to 3 years. We're seeing all the big operators moving. Asia has definitely taken the lead. So we see a lot of large operators in Asia such as, Manulife, FWD, etc., moving forward, Chop, etc., with their digitalization. As we are probably moving into a few years with hyperinflation, I think cost management is of key. I think accelerated underwriting, so being more efficient in your client underwriting and your whole product logistics. And of course, integrating closer with the consumer. That is important for the upselling and the cross-selling. So I'm the chairman of a nonprofit organization called the Digital Health Engagement Institute. And we saw in our latest study where we interviewed over 1,200 insurance operators that digital health engagement is of key importance to the insurance operators to become more efficient, to get closer to the consumer's life, to create a relevance and integrate all that into their go-to-market strategy. So you could compare it a bit with what we saw in the 80s and the 90s. I'm sure you remember the SAPs or the Oracles. Then came Salesforce. I think the insurance industry today is probably 10 years behind banking or travel, retail, where we all know they have gone through the digital or the digitalization of their processes. So the insurance industry needs to look at their foundation and say, okay, what do I need to change? What would that bring me? I think we have enough use cases now in the industry to really make a very efficient transformation. And we see from McKinsey and other companies that are truly transformative in their digitalization in the insurance industry typically have 12 to 15% more EBITDA. So the economic models are really there. So at the end of the day, it's about creating a closer relationship to the client that, in our eyes, if you take accelerated underwriting, that can take out up to 20-25% of your cost structure. Number two is obviously if you can do upselling. We all know that if you create a new client versus keeping an existing client happy, that's a factor 1 to 6. So there are enough arguments and ROI on why to move forward. We saw the excellent study in May from The Economist on that quantified self and digital health is now becoming a global standard. So it's not anymore, I'm going to do a POC, I'm going to see if this works. It is either you are moving forward or you won't survive. McKinsey showed in their study earlier this year that life insurance operators, I think it was 54%, do not earn their cost of equity. So they need to become more efficient. They need to move towards a true digitalization and, what I call full speed forward. So analytics is very, very important. We saw the latest study from CB Insights in New York, where they are basically looking at the whole, analytics space. Gartner Group, the same thing. So globally, it's about 30% of all new IT undertaking that are in the analytics space. So I believe it's an umbrella that you have to put across your organization. You need to be hyper efficient with how do you handle data? What do you make out of that data? Data is a bit like the oil industry. I know everybody has heard it, but you need to understand what is the difference between upstream and downstream. So upstream, it's about digital health engagement, and downstream, it's about the analytics that you mentioned. So those two areas needs to be hyper connected, and create a relevance to your operational efficiency. We call it, upstream digital health engagement, downstream real-time risk management, and you could call it predict and prevent, which is the future of the insurance industry.